Valens Research, Uniform Financial Analytics.
Largest payment processing firm in the world, right? It and MasterCard and UnionPay in China basically have an oligopoly that dominates relationships with both retailers and cardholders. That means that this is an economic moat that no one is going to disrupt. What's interesting about Visa is one, right? No surprise, as reported metrics massively understate this company's profitability. But the other really interesting thing about Visa, look at this. On an as reported basis, you would think this company is kind of investing in its business the last 4 years, right? Kind of. But in reality, what you wouldn't realize is this company is massively reinvesting in the economic moats that it has. It is a high return business that's able to deploy capital in that high return business, investing to grow in areas like digital payments, et cetera. And as it does and does those things successfully, right, and comes out of a pandemic where spending was severely reduced, ROAs are likely to rise higher, and they're already really high. These are the kind of things that we wouldn't even realize if we're looking at as reported metrics. We would look at this on an as reported metrics basis and we go, wow, this company is a 11% ROA business, good return business, and it's plowing money back in the business at the rate that it has its return on assets. That makes sense. Nothing great here, nothing revolutionary, nothing I want to get excited about. It is just basically a cork bobbing along that's kind of just benefiting from the trend in its market. What we see when we look at the uniform accounting metrics is actually it's a high return business with great economic moats. And so if it could deploy capital in this business, it would be a screaming buy. And lo and behold, it actually is. No surprise that unlike the as reported metrics that show a weak return business is not investing, the market is seeing improving returns, which drove TSR rising here. And then it's seeing returns that are mostly stable and the company massively growing, right? Growing its earnings power. And lo and behold, what's happened? The market has realized that and rewarded it. If you're looking at the as reported metrics, you wouldn't understand what the market's thinking, right? You wouldn't understand why the market's paying what it is. You wouldn't understand why Visa is trading at a 35 times uniform PE and as reported PE for that purpose too. And what we can see here is also this and better expectations for the company, right? We can see, hey, you know what? This makes sense. What the market's basically saying is once the economy returns to normal, your economic moats are real and you're going to reinvest in your business and continue to. Now, for what it's worth, we actually think that these expectations may even be too low as we go to more and more of a cashless society, which is why we think Visa is a really interesting name right now. But we wouldn't even be able to have that conversation if we were looking at the wrong as reported metrics.
Valens Research, the world's leading source for uniform financial analytics.